Today I want to do something a bit different. Instead of looking at an individual stock, we're going to be looking at an index, and that index is S&P's ASX 200, which is the top 200 companies on the ASX in Australia. We're going to be performing our usual technical analysis and making some predictions on the overall market as to where we could see it go in the near future. Let's get into it. Welcome into the S&P's ASX 200 index, guys. I really want to take a look at this because it is a very good reflection of the overall Australian stock market at this point in time, as it is the 200 largest companies on the ASX. And we're currently looking at the daily chart, but what I'm going to do is zoom out a bit and go to the weekly chart, just given the time frames I suppose we are looking at this point in time. Now you can see this is probably a bit too far to zoom out. Whilst yes, we could probably put in place some really good, I suppose, trends from back over here when the 2008 crash happened, chuck in a few lines from there and work out, I suppose, a long-term sort of trend, which would be showing a bottom end at roughly about 6,088 points. I want to zoom in a bit more and do it, I suppose, in a bit more of a detailed manner based on our previous drop. And that previous drop was when obviously we had the COVID pandemic hit. And right here you can see that was a massive hit. And from basically February of 2020, we were at a high there of 7,197 points. And we got down all the way down here in March to a low of 4,402 points. So quite a big difference. Since that point in time, we surpassed, I suppose, the previous highs as we saw over here. I'm going to put a line in place to indicate that right about there. And we got all the way up here in April to a new high of 7,624. But over the past few weeks, as I'm sure everyone who is involved in the stock market is aware, we've taken a bit of hit. And you can see these two big red candles here are really a decent reflection of that, in my opinion. So what I'm going to do is basically get rid of course, this point here and see if we can put a bit of a trend line in place to make some more, I suppose, accurate descriptions of what we're doing. So we will end up starting our trend from back here, and we're going to just shuffle it along a bit like this and see exactly where we do land. We really want to be looking at this from a long-term perspective, so starting it from there, let's start it right from the bottom and we can get an accurate depiction of what's going on. And you can see this is realistically probably the best trend line we can use because it starts from the very bottom of this bull run we've had since, I suppose, the overall GFC in 2008. And you can see many different bounce points off that point in time. We did definitely drop out of that trend over here, which is why I want to take a bit more of a detailed approach, but we have come back into it overall. And why this line is so significant is the fact that we are now currently, or have just recently, bounced off it, as you can see over here. That line basically was sitting at 6,400 roughly, and we bounced back up to 6,500. What does this mean for us? I mean, we've seen previously, of course, over here, where we dropped below this line, we bounced back up relatively quickly. We dropped below it slightly here and bounced back immediately. Similarly over here as well. What does it mean for us if we do actually fall below this line? Well, it could be scary. A lot of people are uneasy about what to do at the moment with their investments, particularly with the stock market. And a big driver for that is, of course, increasing rates of interest and, of course, increasing rates of inflation. Now, that has driven, obviously, the prices down. But the big issue here is, where are people going to invest their money if they are not putting it into assets such as stocks? They can't hold it in cash because of inflation rates, so they really need to put it somewhere. So whilst I think this panic initially was probably warranted, and we've hit new all-time highs and that sort of thing, it's healthy to have a pullback. I can't see us crashing hugely. Yes, we may dip slightly below this line, although at this point in time it doesn't look like we're doing so, but overall I think we should be okay. If we were to crash below that line though, how far would we drop? Well, we need to basically identify what are our major support points. Now we can't use the highs previously over here of 07 because we are below that point currently. So what we're going to do is try and use, I suppose, a few other indicators to work out where that is. For me, immediately, I think probably from here in, the 23rd of February where we hit basically a bit of a wall and started moving downwards is a good point to start. And the reason being is we did hit a wall there and we have had a lot of price action from that point onwards. So that is a real good horizontal point of support for us at this point in time. And that value is sitting roughly about 6,034 points. So not too shabby. In my opinion, that is probably worst case scenario at this point in time. Best case scenario for us, what's that? Well, simply we bounce. We bounce upwards, and I'm going to put in place the top end of our trend line. I'm going to put it probably just about there. And this is why I said I wanted to get a bit more detailed. The top end of this channel is a bit confusing from the start over here, and you really only start to see the bounces off this resistance point, I suppose, in the past decade or so. And you can see the most recent one was just over here in August of 21, and we have effectively been trading sideways and only recently downwards from that point. Something I suppose even more significant is our 20-day MA crossed below our 50-day MA as well, and that's obviously from a weekly perspective. This typically indicates to us that we are now starting to see a bit of reversal in the trend, and it hit hard and fast given that it was the first time we've seen, rises in interest rates and that sort of thing for quite some time, and inflation due to COVID is going up very, very quickly. So this drop, in my opinion, was warranted, but at this point in time, I would consider it healthy given the fact that it's moved down to the bottom end of this upwards trending channel and we are seeing a little bit of a bounce. Best case scenario for us now over the next few weeks is to see this support line hold up and start to see a little bit of a move upwards, a bit like that. I would be scared if we saw a line moving like this and consistent tests of that bottom end line, because to me that would probably indicate that there is going to be a breakthrough downwards. But if we do see this sweep up, I think we are really in the clear, and to be quite honest, I don't think we're that far off seeing new all-time highs once again. Now, are there any other patterns that we can see right here? Well, not at this point in time, apart from the fact that it looks like we did see a bit of an upside down cup and handle pattern come into play here. So we've got the cup forming there with the handle form here, and we broke out of the bottom end of that handle downwards. That's the main one we're seeing. It looks like possibly we could be seeing another pattern start to form itself, a flag pattern, but we don't typically see those patterns, I suppose, form over this long-term period of time, but it would look something like that if it were to occur, and that would actually indicate a continuation of the trend and we would break through. But of course, as I mentioned, that has not come into play at this point in time. So what do we look at? Well, I like to look at the usual things such as MACD, and this is a great indicator to work out exactly what's going on. You can see that we had the crossover here of the 12-week MACD below the 26-week, I believe it is, and it is moving rapidly downwards. We've certainly not confirmed a peak yet, but I think that was an influential factor, of course, when we saw these red days over here as a confirmation that we were starting to go downwards. And you can see typically what has happened in the past is it's been relatively calm, the ups and the downs when we're looking at this sort of thing, and it's pretty predictable, except when obviously the pandemic hit or the recovery from that. But we were starting to see this sort of thing happen again, but our latest green period, just given the state of things, was not long-lived. So a red period, I think, of massive significance is unlikely to occur, but things remain to be seen. When do we pick the bottom? Well, we have to wait for these two lines to actually cross over each other again. That's when we can probably pretty safely say, okay, the bottom is likely in the market. So for those of you who are looking at the indicators at the moment, there's two things you need to watch. You need to watch for that cross to occur. It hopefully should occur, I suppose, within the next few months. And as well, you want to make sure that this upward channel is maintained and we are seeing a continuation in the trend. So over the next few weeks, what do I expect to happen? Well, it's looking like a bit of confidence is coming back. And whilst many people might say this is a dead cat bounce, for instance, it is a bounce off a very, very important point of support and our overall long-term trend. That is still in play at this point in time. Whilst yes, it was broken over here, that was due to exceptional circumstances. And very, very quickly, all things considered, we saw a big rally and hit new all-time highs, which in my opinion really shows the strength of things to come. So all in all, what are we expecting? I'm really hoping that we see this 12-week moving average as our next target, our next point of resistance, of course, and we start to see a bounce, hopefully like this, and a swoop upwards, maybe not that sharp, maybe something a bit more like this, and see consistent growth. Because what the market looks for, and of course what stocks are looking for, is stability. They want to see stable and consistent growth to see an appreciation in value. So if you've got the top 200 companies, which keep in mind, they're still making money, they're still operating, there's nothing wrong with them, then we should start to see this consistent growth come into place. The only time we wouldn't see this occur is if GDP or something like that really starts to struggle and growth stagnates within the overall Australian economy. But given that what we're seeing at the moment is a lot of stimulation from the government, I don't think that's going to occur, and I think the most likely scenario at this point in time is a bounce off the bottom of the channel and a move up to test that first moving average. That wraps up today's analysis, guys. I'd love to hear your thoughts down in the comments section below. Of course, in particular, I want to know, where do you think the overall Australian market is headed and the global markets as well? If you did enjoy today's video, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.